Hey traders, Akil here, and welcome back to another Forex Market Preview video. Thank you as always for taking a few minutes out of your weekend and spending it here with me. Today, we're going to talk a little bit about the head and shoulders pattern, and we're going to do a decent amount of analysis, so make sure you're paying attention. And for you guys that are brand new, however you stumbled upon this channel, I hope that you find it useful. I do ask this, right? After you're done watching today's video, just go back and watch a few more of our other videos. That way you have the full experience of what we talk about each week here in the Forex Market Preview, both from the technical side of things and of course, the psychological side of things as well. And I'll tell you what, if you like what you see, make sure you head over to our website, tradeempowered.com, click the Learn to Trade tab at the very top. While you're here taking the free workshops that we have available, I recommend Into the Gray. But make sure you also sign up for our Forex Market Preview email list. It should pop up somewhere in the right-hand side of your screen. That way you get notified each and every time this video comes out. You get notified each and every time we put together a new training workshop for you guys. We do a lot of free workshops throughout the year. And of course, if we ever have any crazy discounts or deals on any of our educational services, you will be the first to know about it as well. And perhaps you can save yourself a little bit of money depending on what we're promoting at the time. Now, before we get into today's analysis on the dollar yen, looking at a head and shoulders pattern, I want to give you guys a look back really at how the idea for this trade started. This is a trade that we started tracking in our Syndicate program early last week. And I put together a video for our Syndicate members, kind of just with the initial idea. And I think that's going to give you some great background on why I'm interested in this move in the first place. So sit back for a few minutes. I'm going to edit that video and shoot a little bit of it your way. And then we'll come back and look at the live charts and talk about what's on my radar for this week ahead. Hey Syndicate members, Akil here. It is Thursday afternoon, almost 3 o'clock, and today I want to take a look at the dollar yen. Dollar yen is an interesting situation, and this comes off a very good conversation that we had this morning in the live trading room. And I want to start off by showing you this. I know many of you guys have been asking about it. Yes, there is technically there was a Cypher formation on the daily. If you start your X leg right up here at 114.37, this is going to be our X to A, our swing high to swing low, our A to B retracement right here. We then have a B to C move, and then we get a CD completion right at our 786 Fibonacci retracement, which is going to be right. Look at that, almost nailed it perfectly right in there. So yes, this was a Cypher pattern. I say was because technically it is invalid. We have had a spike above the X leg, which technically is invalid. Now I know in transformation members, we've talked a lot about how the close is going to be much more important than the spike. Do with that what you may as far as your rules go. But want to give you guys a heads up about this. Now, what I really want to look at today was really putting the clues together in the market. We had a great conversation today about how it isn't the signal. Trading isn't about finding a single magical signal. It's really about being a detective and analyzing the market and looking for different clues in the market and putting those clues together. Very similar to what Jason Greystone walked you through this morning in our Syndicate War Room meeting, where he took you through kind of the CTS checklist and how you take those different elements of technical analysis and put them together to build a valid trading opportunity. This is going to be similar, but this is going to be more looking at the IPDE process: identify, predict, decide, execute. And we identify what the market has done. And the first thing I see here is I see that price action rallied all the way up to previous structure highs, right? Look left, structure leaves clues. Price action came all the way up from this bottom, up, came in the previous structure highs, and we have failed to break that level, meaning we got a hold of that level. We did not get a higher high, higher close, showing that the resistance level, at least for now, has held. And that's going to be reversal signal number one. The first signal of a potential reversal, I guess I should say, is the hold of structure, because if this was a very strong trend, we would have blown right through it. So keep that in mind. And as we go down to our lower time frames here, we're going to be setting up, and I'm going to go down to the 4-hour chart, we're going to be setting up a second potential reversal pattern as well. And this second potential reversal pattern is going to be in the form of a head and shoulders formation, right? So if we look at our move right here, let me just give myself some real estate here. There we go. If we look at our move right here, this is what a head and shoulders formation looks like, right? We have a left shoulder right up here where the market comes up. We consolidate it a little bit up there, right? We have a head. This is going to be the top, the V top that tested previous structure highs. We then come back down to retest what is the neckline. You can see this pink line right here. And then we venture back up to create the right shoulder. And typically the right shoulder, these things aren't always even. I had a great conversation the other day about trading books. And I got to ask Akil, how come most of the books you recommend are on trading psychology and stuff like that? And mainly it's because I think that's the most important part of trading. That's the biggest struggle that traders go through. But you have to be very, very, how do I say this? You got to be very careful with books on technical analysis, because one of the things that I've noticed in many books on technical analysis, they tend to show you opportunities that fit what they want to show you. So if they want to talk about this moving average cross and how price action came back to the 50 EMA and bounced off perfectly, they'll just search back in time and find a situation where it bounced off perfectly. Now, there are some people out there that are doing that to scam and just sell books, I'm sure. There are other very, very good educators out there just wanting to show you an example. And if you're going to show an example, why not show a good example? But in reality, things don't form perfectly, right? Many of you guys that took the course content, whether it's advanced pattern trading course or the transformation course, you guys have seen where we do, we talk about Gartleys and Cyphers and bats and these advanced pattern formations. And we give you the easily drawn out examples where they're perfect. And then when we hit the charts, it's like, that X leg doesn't look as smooth as it originally did. And that's kind of give you a realistic look at pattern formations. But anyway, in a perfect scenario, you'll see a horizontal neckline like this, and you'll see a right shoulder that comes completely to the level of the left shoulder. But sometimes the right shoulder is higher, sometimes the right shoulder is lower, sometimes the neckline is slanted. So you really have to train your eyes to see this. But long story short, a head and shoulders formation is also a reversal pattern, just a different type of reversal pattern, right? So we have a reversal pattern from the higher time frame. We have a secondary reversal pattern on the trading time frame. And what we want to do is we want to put two and two together. We have higher time frame confirmation. We have a trading time frame pattern formation. Everything should be screaming, get bearish, get bearish, get bearish. So what I'll be waiting for here, and here's how I trade head and shoulders. I trade them like a trend continuation trade. So I'll be waiting for a break and close below this neckline, and then a retest of that neckline, and then a chance to trade it down lower. Again, just like any other trend continuation trade. You can also trade them at the right shoulder. So you can look for an order right here and get on in advance of that potential move. That's a little bit more risky because there's nothing that says this will indeed be a head and shoulders formation versus just a continuation trade up here. But of course, you can make that type of style work if you use the right type of confirmation and whatnot. But the key what we'll be looking for is a break of this neckline here. All right, so a lower low, lower close, and then a retest of that level. And we can look for a bearish opportunity here on pound yen. So that's on my radar for tomorrow. And we'll see if we get any follow through action. If so, you'll see me shoot it through the trade floor saying, hey guys, I am short. Or, if it's anything interesting, maybe I'll shoot a quick hit video over to the trade floor. And guys, I have been doing that a little bit more lately. If I see something in the morning, I've been shooting videos directly to the trade floor, just giving you guys a link. So make sure you're checking the trade floor as well. It often takes a little bit of time to record. So I hope you guys enjoyed that. And it brings up an important lesson. I got a few emails about this week. There were a few traders where we've been making some pretty decent predictions in our Forex market previews over the last few weeks. And there were a few traders talking about, man, Akil, I saw your video. I was prepared for the move. I didn't have a chance to catch it because I just wasn't paying attention, essentially. And it brings up a very important point about how you're treating your trading. And if you're going to treat your trading like a hobby, you're going to get destroyed. You got to understand that, especially in the Forex market, you're going up against the best traders in the world, right? You're going up against traders who do this professionally, who, feed their family based off their performance in the markets, and traders that have more access to information than we do, and quicker information as well. Traders that have access to better forms of analysis. They have teams that are able to analyze charts and put together watch lists for them. We don't have that. So it's very important that we are consistent in our analysis each and every day, and we stay up to date. We stay in the loop with what we're watching, because I'll tell you what, good opportunities don't last, right? Good opportunities don't come that often in the market. And when you find yourself eyeballing a good opportunity, the last thing you want to do is miss it, right? And I know it's hard sometimes. There are lots of pairs. Many of you don't have portfolios, so you're just randomly going to one pair one day looking for something, another pair the next day looking for something else, and it can be difficult. I don't think that's a valuable way to trade, but to each his own. But you have to have consistency in analyzing the market. You have to treat trading like a business. It can't be a hobby. You have to come in with a plan, with a routine, and treat it just like any other 9 to 5 if you want to be successful. So for you guys that are out there missing trades because you're doing that, or you find yourself being that coulda, shoulda, woulda type of trader, I think it's time to seriously think about how you're treating your trading, and are you treating it like a business? So apologize for that rant, but I hate seeing those emails. Oh, I missed it. What do I do? And it's like, pay attention to the markets, right? Stay in the loop, right? We've been talking about it all week. How did you miss it? But anyway, let's head over to the charts here. Let's go over to the dollar yen. We're going to go on the 60-minute chart here. And I'm just going to draw back on, I'm on a different platform here, but just draw back on our head and shoulders formation, right? So we have our left shoulder here. We have our head here. We have our right shoulder here, and we'll just draw in a nice little horizontal neckline right there. So we did break and close below our neckline. That confirms the head and shoulder setup. And what we're looking for now is a retest back into previous structure so that we can hop on the next move down. So for you guys that are familiar with how a price chart moves, right? If this is our initial starting point, if this is our initial structure low, this is going to be our outside return. We then put in a new structure low, and what we're looking for is another outside return in order for us to hop on a bearish move. And if this is new or confusing to you, again, you'll learn about this as soon as you go to that Trade Empowered website and you watch that Into the Gray training. That's where we teach the basic elements of reading a price chart. And it doesn't matter what type of trader you want to be. If you can't read a price chart, you're not going to be successful. So again, newer traders, if you're new to this channel, it's about a 2.5 hour free workshop. Find some time, and I certainly recommend investing the time in working it and educating yourself on the basics of what you plan on doing. So we're looking for an outside return here in order for us to hop on the trend. And the next question is, well, Akil, where is that move going to come to? Where can I look to hop on? Because right now it's just wide open white space, right? And what I'm going to do here is I'm going to go to my DSR indicators. This is an indicator we use here at Trade Empowered called the Dynamic Support and Resistance Indicator. And I'm going to put 2 of these on my chart. And this is going to give me a visual representation of both major and minor structure levels. And I'll show you what I mean in a second. I'm going to take one DSR here, and I'm on the hourly time frame. I'm going to set it to my higher time frame, which is the 240-minute time frame, or better known as the 4-hour chart. I'm then going to take my second DSR level. I'm going to change the colors because I don't want to confuse myself. Let's make this black and orange. No, blue. Black and blue. And I'm going to set this to the 120 minute. Actually, I'm going to set this to, let's set it to 120 minute. 2 times the trading time frame. So I have 2 DSR levels on right now. I have one set towards my higher time frame. That's going to be my major. It's 4 times the time frame that I'm on right now. My second is going to be set towards set as a minor DSR, which is set towards still a higher time frame, but only 2 times the current time frame that I'm on. And when I click this OK button, you can see what it's going to give me is a handful of colorful boxes, right? Shiny, colorful boxes. We all like that type of stuff. And this is going to give me an idea of where the previous levels of structure are and where I can look for price action to return to for the next move down. Because we all know, look left, structure leaves clues. So if we take our first minor level right here, let's just isolate this level. This is going to be the first zone, right? The first area in which I look for price action to return to. And now I can use some of my other tools. So let's say I take my Fibonacci retracement tool. Let's say I go up to my little pencil deal up here, bring on my Fibonacci retracement, and I drag it from my previous swing high to my current swing low. What do you know? We're going to get a 50% Fibonacci retracement number right in the middle of that zone. And again, if you guys are new or for you guys that are Fibonacci snobs, because I have to say this now because I always get the commenter saying, well, Akil, you know, a 50% isn't really a Fibonacci number. And it's not, but it's on my tool because it's a highly psychological level. So I'm going to say it's a Fibonacci level, even though it's technically not. If you have a problem with it, you can comment below and I can politely ignore you. So I have my 50% retracement right there. This is the halfway point between my previous swing high to swing low. Now, what else can I do here? Well, I can take a Fibonacci extension tool. So back up to my triangle deal. I go down to my Fibonacci extension tool, and I'm going to take a Fibonacci extension. Let me just zoom in a little bit for you guys so you can see this. I'm going to take a Fibonacci extension from my last swing low to swing high, right? So from my new structure low right here to the little retracement we had this past Friday, I believe it was. Yep. And back down. And you can see that is going to give me a 127 Fibonacci extension right in that zone as well. So I have a 50% Fibonacci retracement. I have a 127 Fibonacci extension. Now, lastly, I can do this. I can take my extension tool one more time. I can draw it from our inside move right here. So our first move was from the swing high to swing low, and then we have it here, and then we have this. And I'm going to take that Fibonacci extension tool. I'm going to draw it one more time. This is called the Fibonacci inversion technique, and draw it right back down. And you're going to see that we have another Fibonacci level right in that zone. So I have a 50% Fibonacci retracement. I have a 127 Fibonacci extension. I have a 1618 Fibonacci inversion, all within that DSR zone. Now, lastly, I'm going to take this initial move here. I'm going to copy and paste it. And if we get an equal measured move, this would be also called a complex pullback, aka a multiple legged pullback. You can see that equal measured move, ta-da, is going to put me right in that level as well. So what this is doing is this is taking the different elements of the different tools, I guess you could say, that I use to perform technical analysis, and it's putting them all together in order to help with a prediction, right? So I have structure, I have Fibonacci, I have market harmonics, right? And I'm putting it all together to build a case for where I want to look for the market, or where I will predict the market to come to so that I can get involved. And you can see in this particular scenario, everything is lining up. So this is certainly a level, right? This initial DSR zone, this is certainly a level or a zone that I can look for a potential reversal. Now, we can do the same thing with target projection as well. And again, keep in mind, guys, all of this can change. One of the fun parts about doing analysis is we spend lots of time. We just spent 10 minutes doing analysis, and guess what can sometimes happen? The market can come here and just blow right down, and you have to erase all of your markings right from the chart. And that's what happens the majority of the time in trading. You spend a lot of time doing analysis. The market does what it wants when it wants. You're like, okay, well, that was a waste of time, and you right click delete drawing tools. However, for that one time, say out of every 10 times you do analysis, that one time that it works and you're able to involve yourself in a profitable trade, it's well worth it. It's well worth it. So we can do the same thing for target projections as well. In fact, let me see, this might be a 3D2 is going to be a little bit high of that, isn't it? Yep. We can do the same thing for target projections as well, right? Earlier, if you remember, I used my DSR indicator, my dynamic support and resistance indicator, to measure both major and minor levels. Now, we have minor levels up here, but if you look lower, right, you can see we have a major DSR level as well. And this tells me that this level right in here is going to be my next major level of potential structure support. And if the market were to come to this level that I predicted, let's just see what can happen here. Well, let's take our initial move down. Let's copy and paste that. Let's drag it on. And what do you know? We're going to have a one-to-one measured move essentially right at that level. It spikes a little bit past, but we know that the markets aren't perfect. We can also take our move up here, right? The initial move down towards our neckline after creating the head of our head and shoulders formation. We can copy and paste that as well onto here. And what do you know, right? A one-to-one measured move right down that level of structure as well. And then again, we can take our Fibonacci tools, guys, and drag it from our swing high to swing low and back up. We have a 1618 Fibonacci extension down there. We can take it from our smaller move, swing high to swing low, and back up. We have a 127 extension down here. We have a psychological number in 112 even. So we can use the same analysis to project targets as well. And this brings up another good point. I got the most brilliant of comments the other day on one of my trading blog videos. For you guys that can do some shameless promotion right now, so if you hate it, just leave the video. But I do basically a daily series called the Trading Blog, where I kind of share with you what's going on in my trading on an everyday basis. And a lot of the times I'm answering questions from traders across the interwebs and just giving you daily tips on how to get better. And I did a really great one last week called The Death of a Trader. If you've ever struggled, or if you ever find yourself making psychological mistakes in the market, you want to watch this video, because it talks about how you can easily basically destroy yourself as a trader by making poor decisions in the market. But I got the most brilliant comment the other day that talked about Fibonacci. I don't remember the whole thing, but I know the end of it said, Akil, if Fibonacci's worked, they would work all the time. And it's probably the dumbest thing I've ever heard, because nothing works all the time in trading. You can have the best strategy in the world, right? We can make all these predictions. It doesn't work all the time. And as traders, that's not what we're looking for. We're not looking for something to work all of the time. That would be insane, right? There's no such thing as a 100% winning trading system. We're just looking for something to work enough of the time. We're looking to find the smallest edge, right? The absolute smallest edge we can get over the market. And that's how we gain consistent profitability in trading, is finding small edges, right, with our system, and then consistently executing it, consistently exploiting those small edges day in and day out. And the key word is consistently doing so. Because even if your system or strategy has an edge over the market, if you can't consistently execute that strategy or system, if you can't consistently exploit profits or potential profits from the market, you're going to be stuck doing a lot of running, but going nowhere. Think about yourself on a treadmill. You're putting in a lot of work. You're sweating. Your heart's beating. You're tired, but you haven't really gained any ground. You're stuck at break even. This is a level that Mark Douglas, may he rest in peace, calls the boomer busters, where traders are doing enough not to blow their accounts and go broke, but they're not really doing enough to take it to the next level and actually be profitable, right? And that goes back to the concept we talked about earlier about just being consistent in your analysis and taking your trading seriously. So I have no idea where that rant came from. I was talking about Fibonacci, so I started thinking about it. And, you know, the dumb comments tend to stay in my mind, because this was a gold medal winning dumb comment. It was ridiculous. But again, it's all about exploiting your edge. And when you can put different tools of technical analysis together like this, you're just building a case for entry. You're building more reason to get involved at that trade, whether it be taking the actual trade or looking for areas to take targets. And that's what we want to do on a consistent basis. So I appreciate you guys joining this video. This isn't the live room. I appreciate you guys watching this video, right? If you liked it, as always, do me a favor, hit that like button. Please share this. That's the biggest way we spread the word here at Trade Empowered, is by you guys hitting that share button, for you guys seeing this on Twitter and retweeting on Facebook, on LinkedIn, Instagram, wherever you're watching this at, just by sharing it. It takes a second. It's a massive help to us, and it helps us get one step closer to our goal, which is not only to empower traders, right, and help produce independent, consistently profitable traders, but it helps us to kind of change the mindset of what trading is. That's been a big goal of Jason Stapleton since he started the company. It's been a big goal of mine. I know it's a big goal of Jason Greystone as well. But we want to show you guys what the reality of trading looks like. And we try to do that by giving you guys the good, the bad, and the ugly, not just the good and the profitable, because that doesn't make you better, not selling you dreams and making you think this is easy. It's very, very hard. Most people don't make it. Chances are you watching this video right now, you're not going to be successful. I hope you are, but just the odds say that. So if you're going to be a trader, if you want to go down this road, right, you need to make sure you commit fully. And you need to ask yourself this question each and every day. Am I doing everything possible to put myself in the best position to succeed? Is there anything else that I could be doing better? And if you're not, if the answer is no, if you're not doing everything possible to put yourself in the best position to succeed, you're going to fail, and you might as well quit right now. If the answer is yes, and you are, you have to be patient. Like any business, it takes time. Success takes time. It doesn't come overnight. But if you continue to get a little bit better each and every day, find the positives of each and every day, you'll find that success. You'll earn that success before you know it. So you guys keep grinding. I'm going to keep teaching. And until next time, plan your trade, trade your plan. Take care, traders. And good luck in the markets next week. All right, traders, so I hope you enjoyed today's video, and if you did, please show us by hitting that like button and subscribing by clicking the button right below. If you're looking for more educational content, feel free to head over to our tradeempowered.com website, or also take a look and you'll see more videos available for you. Have a good one.